Bet. O'Malley. Oh yeah, I'm watching that fight, bro. All right, so let's just start. Let's start an NQ this week. All right, we'll do like a brief recap on all markets. So probably won't get like too in depth with it because you know me, I'll just start yapping for like ever. Um, but like, what do we open the week up within? All right, so the previous week expanded. Here's the open price. Expanded into these highs, right? So it pretty much expanded these highs and then retraced back to the range. So the reason why I was bullish Friday is because if you go to the weekly candle here, it's just like this week. This is why I'm going to explain it. It's the same thing. You see how this small wick, you see how far we expand away from the opening price? It's not likely to come back here, right? All the way to the current week's low. So if it's not likely to come back to the current week's low, map out EQ of this range, or what you're going to look for is any relevant level above the weekly open to kind of cap off this retracement in a sense. So if I go over here, like what is that relevant level? It's this swing, it's his relevant swing. So it's always going to be in the form of like relevant swings. And you're going to see why I longed YM. Because YM took this relevant swing out on Thursday, which formed a divergence. As you see this divergence here? So when we form a two-stage SMT, it's the same thing. YM's open is right here. If it's not going to come here, then it's, I know that the weekly range is probably capped off at this point. We have an SMT up here. So I just know that it's going to close likely somewhere in this range, you know. So you're going to see that we form a relevant high. You see this high right here? Within this range here. And then here's your two-stage SMT. So literally all my trade is from here to here, right? From here to here. That's it, you know, because this is a relevant high. It's not going to expand all the way up here. It makes sense to cap out the weekly range at this point. This happens a lot of times where weekly or even daily ranges are capped off by daily or weekly SMT. Here's the same thing on Friday. I traded this day as well. Had the same logic. You're going to see that there's a previous week's low SMT here, cap off the weekly range. Same thing over here. Happens all the time. So you're going to have areas where, you know, we can cap off that retracement, or in this case it's a retracement, but that's a topic for like another stream, to be honest. But yeah, I took this here, right, just to get to here, and then it's a very low probability after that. As you see, we get that new phase of price and just kind of bullshit for the rest of the day, because we're not going to go down here, we're not going to go up here. So where's it going to go? It's just going to bullshit the rest of the day. Anyways, with that in mind, with that closure, that daily closure, this is what gives us insight that we can kind of roll over, actually, per bias. So you're going to see that the previous day, YM took out, or did not take out this high, right? And now we're printing this SMT here. Sorry, I got to play one more candle. Like this. All right, this is a two-stage SMT. This is not something that I've shown you guys. I'm going to show you now. This is something I put in my recap, but this is an SMT between candlesticks. So it's a Kraken correlation, your first Kraken correlation. It's between candle 1 and candle 2, right? It's just like this. Or it just makes a higher high, the one that sweeps out like this. And the next SMT is between candle 2 and candle 3. So it's still a strength switch, SMT, but it's between candlesticks, like this, right? This happens a lot. Here's what we see here, right? And then I can roll over this bias because we have this SMT. Now it's important that the phase of price that we have within this candle, right? Because we go back over here to phase of price. Where the fuck is it? It's over here. What is the reversal signature, right? It's a expansion, reversal, expansion. Am I good here? Hopefully. Yeah, I think so. So it's a expansion with expansion or A and B reversal, right? So it's expansion into like a high on, like, maybe let's say this is hourly high, the 5-minute consolidates or something. We manipulate and expand, right? It's either or. These are the things we look for, as well as SMT always. So, and this is just a higher time frame signature for a reversal. But like this candle can look like seek and destroy sometimes. You don't want to see that. You want to see some sort of reversal signature within it to validate it. So that's what we have here. If I go on the hourly chart, you kind of see it. So a lot of the lifespan of this candle was very, seek and destroy, right? But towards the end of the day, we put in this reversal signature. Who added me? I don't know. So what we do is if we're going to continue from here, this is when we mark out EQ of this candle's range, right? What do we have within it? Is a fair value gap. So now let's go over here. So the key levels that print after true reversal, so either a two-stage SMT or maybe a manipulation, like maybe we manipulate a relevant low or something. The expansion away from that protected swing or manipulation or true reversal, whatever you want to call it, the fair value gaps in order blocks that print away from it should support price higher, because in expansion, right, we expand away from a reversal. These are the key levels that should be supporting price higher, right? We should be rejecting lows as well. So this fair value gap, this order block that gets printed after the reversal, needs to hold, right? And what's the most ideal scenario if we want to trade bullish, like a continuation, because this is the reversal? We want to see these candles be expansion candles, right? How do we want expansion candles to form? A bullish one in specific, we want it to open low first. That is the best and most high probable scenario. That's exactly what we do. We actually kind of gap lower a little bit here, and then we put in a reversal. Right? If I show you the reversal here, how do you know it's a reversal? Right? So you get your initial CSD. I'm using this candle because this is the bulkiest candle. I don't really care about these little small range candles. I just use this one. The fact that we are respecting this opposing candle and then expanding away from it, this is how you know you're in a, the reversal's put in, because again, after reversal's put in, what should be respect? Opposing candles and fair value gaps, and that's what we're doing here. And at the current high of day right here is literally 1800. This is why the protraction phase of the candle, entering within it when the candle opens low first, is the ideal scenario, because when it just opens low directly, like this, the high of day often is like Asia session or like 1800 or something. And it's the best when it's 1800, because obviously it's not likely to, actually be that reversal. This is also a retracement signature, because we expand in 5 candles, 6 candles. You see this very slow lethargic movement. That's a retracement signature, not a reversal signature, right? So the driver opens up right here. The driver is opening up near these 1 hour and 30 minute invalidation levels. That's something I also have in here. I have it in positional entry. All right, so when you are opening the driver near these actual higher time frame CSD points, or whatever you call them, this is typically where we will just expand. And if you have your stop loss as close to these lows as possible, then that's ideal. So that's what you're gonna see me do. Is I assume this low to be, protected here, because this candle here actually creates an SMT right here. You see that SMT there? So now I assume that the driver, this next candle, should just rip higher into this high, right? With little to no, really, I don't know, resistance in a sense, because there's nothing here that can stop us. There's literally nothing. There shouldn't be anything to stop us here. We are still within the protraction phase. So I've mentioned this many times. If you're within the protraction phase of the daily candle, the low of day has already been put in. This is when you should get a one-sided expansion, right? That's exactly what we get. I've mentioned this before, around, where is it at? And then just for targets, you need a target if you're going to be entering around a driver. This is what we're doing right here. The daily is opening low, right? And we have Asia session highs to target, but we also have the previous low to target. So it's should be low resistance, movement. What else did I have here? I forgot here. Okay, this is kind of what we're trading right now. The daily is already put in. We're in expansion, and we're having opposing candles. They're getting closed over right before the driver, like this. So what should the driver do? It should just expand away from him, right? So that's what I'm kind of trading here. And you guys saw me enter within this fractal model. So if I go to like the hourly or something, I think it was a 30-minute actually. Yeah, it was 30-minute. This is a candle 4 that I'm trading right here. This open, low, high, close. If you just look at the GXT profile, we have the daily opening low, and then we have a London reversal, so 6 a.m. continuation. As long as you have that small wick, we can trade it. So if I go to the 5-minute here, so I have to play this candle here. You're going to see that we directly open low. So this open low here within this opposing candle, it's not this opposing candle because I haven't closed above it. This is more like a relevant low right here on the lower time frame. See the space between these lows? So it's like when you form this SMT here, I can kind of soup it because yeah, I'm already within here, and this is perfect. We're in this 30-minute order block. Remember that as well. This is just candle 4 trading away from it. So this is when I just enter around here. We'll just say I entered like right here. It's probably not perfectly right there, but you get it. And I took it to here. Right, and the driver just exploded, right? And if you really want to be safe, like this is the safer entry. It's right here. It's probably the better entry, more safer entry right there. But yeah, that was my entry. And now once we hit this high, this is a relevant high. If I go to the 4-hour here, you're going to see that the other assets are really struggling, especially YM. So when that happens, when one assets are really fighting each other, typically the trigger for these assets to catch up is a manipulation. So that's where you're going to see. So what you're actually seeing is YM is consolidating while NQ takes it a high. So that's the manipulation, right? So this is the trigger for YM to catch up, right? Then you're going to see that we form an SMT here, right? That's actually a 2-stage SMT. It gets a little confusing. I'll show you. So I TP here because I was going to TP here regardless. I don't care if all the assets expand. There's nothing beyond this high, right? We're not going to get to here. So this relevant high that you see in the 4-hour, I think I TP here or something. Just because this is like a fair swing to this high. There's nothing beyond it. We're not going to go all the way up here, especially on a Monday. It's just not likely. I'm very happy with this move. But what you're going to see is YM is really struggling, like I said. And here's the previous stage low. Whoops. So you're going to see that it was really just consolidating. As soon as NQ took out this high, so at 9:30, we'll see even get precise with it. At around 9:35, this is when you can start to look for YM potential sells, right? Because we have that SMT. Now, what do you want to see ideally is a form of strength switching. You have to be very detailed with it, right? If I zoom on to like the 1 minute or like the lower time frames, you're gonna see there actually is a strength switch here. So look right here. So the high over here is 939 over here. And over here, the high is 934. And then if you mark out 939, it's right here. You see this? This is right here. So that is a form of strength switching in 2-stage SMT. That does not mean that NQ will trade all the way down here. It just means that it's going to have some sort of movement lower. And that's all that YM needs. Because if they're fighting each other, it's going to be very choppy. But if NQ is moving in the same direction as YM, then that allows YM to hit its level, right? It's like the same thing over here. So there's 2 ways. It's like either YM will, it's either NQ will like more so consolidate while one asset expands, or it'll just trade in the same direction, like expand. And it's ideally that it expands, but if it consolidates, for example, and doesn't expand in the opposite direction, that will allow YM to also expand. That's something you saw on gold as well yesterday. But anyways, that allows YM to trade. I know some of you guys took this, so pretty decent. Right, there is some equal lows on here and whatnot. So it would look something like this. If you took this, mechanically, you can take this right here. Because there's no CSD within candle 2, as you see. So candle 3 has to create it, and you don't have to wait for another CSD in this, right? So that was before the drivers though, so I probably wouldn't take that, honestly. I'll probably take this one, just because just because NQ at that time had not hit this high, so I played price a little bit too forward, but I would take this one for sure. I think some of you guys took that. And what this does here is create a two-stage SMT at these lows. So what this was here is we know that NQ is stronger than YM, right? We know that. So this is just resyncing to the stronger asset. Again, this is like there's multiple like sequences and stuff like that, so it's going to be confusing for you guys because I haven't taught you guys all this. But we'll probably go over it one day. But here's what you have simply, right? You have this two-stage SMT. Now, I did not trade this higher, for example, because the profile, it just doesn't really, it's just not going to be like the cleanest ever when you already take out this potential relevant high, right? I don't really like to take these trades that are like, what do you call it? Like they expand, retrace, and expand again with a super deep retracement. I typically don't like to take these trades, especially when candle 2, there's a couple reasons why I wouldn't take this. Candle 2 expanded, reversed and expanded in the same candle. So when that happens, typically candle 3 is going to be ass, you know what I'm saying? So YM over here and ES and stuff like that, it's just going to be like lower probability, to be honest. It got there, but I'm not going to say that I would have traded it because I didn't. Yeah, there's a reason why. Like I just don't like trading that stuff because this profile, if you look at it, it's typically not the best, right? If you want to trade a lagging asset, here's how you want to do it. Ideally, they all do the same. They all printing the same structure, ideally, right? They all reversing as well. But one asset just hits this high first. I want the structure, like the intraday structure, to be relatively the same, damn near. And I'll show you an example the next day, actually, of a YM example of this. So this is when I want to trade it, like a consolidation like this. Whoops. I have to like make this different now. Fuck, hold on. Let's move this way up here, some shit. Let's say this asset's consolidating, and then creating maybe like a lower low, for example. And then this asset would be expanding, and then creating like a higher high. This is how I want to trade it, right? Because they all reverse. They're all showing the same, signs to reverse and stuff like that. Over here, it's a little bit different. There's too much going on. The structure is way too different. So I don't even know if there was some sort of like strength switch, but I did not take this. I don't know if anyone did, but that's something that I typically avoid. But with this closure, it sets up a one-sided narrative. So to be honest, coming into Monday, this is a one-sided narrative, especially for NQ. That first initial expansion towards the first relevant high is going to be the easiest to trade. The easiest to trade. After we hit these highs, right, price can have a new phase of price. So here's where you see price just goes from SMT to SMT. That's how price moves. It goes from SMT to SMT. But anyways, with this closure here, we can more so do the same thing we did on Monday. If we want to see continuation, you mark out the whole candles range. Right? Then we look for a key level within it. We also have the CSD on the daily time frame. So this is a T-Trade's ideal swing formation. We want to see this candle also expand in towards our higher time frame draw liquidity. So specifically with a higher time frame, like a higher time frame reversal and model in general, the key levels that are created after this higher time frame reversal, as in like fair value gaps, order blocks on the 1 hour and 4 hour time frame, these should be what's so like basically creating the low of the day for these expansion candles. So you see the low of day is created from an hourly fair value gap. The low of the day over here, you want to see some key level within this range. There's really not much, but just like on the just within like the low of the day, or just within like a daily reversal. So what we just talked about was a higher time reversal. What about a daily reversal? It's the same thing, but we fractalize it, where the key levels on the 1 hour and 30 minute should support expansion, right? But the higher time frame, the 1 hour and 4 hour key levels that are created from the expansion should support expansion, right? So it's the same thing, but it's just fractal. So with that in mind, when I look at this day, let's look for a key level within the previous day's range, if there is any, because sometimes there's not. So in this case, there's really none on the 4 hour time frame. So then we drop down to the hourly, and there's really nothing here, right? So we talked about this before in our invalidation video or stream. If there's no key level within the previous day's range, then the current day has to create it. So what does that mean? That we have to retrace and then create like a swing low. That is going to create a relevant low in the market. So when manipulated, creates a protected swing to trade away from. Right? This hourly low would be the key level, right? Because we need, if you're going to trade the protraction phase, ideally the hourly or 4 hour, or pretty much the hourly if it's going to be intraday, but you get what I mean. The low of the day has to be formed from an hourly and 4 hour key level, right? So if you just play this price, how do you want the day to form? Just like the previous one where it opens low first. This is going to be the easiest to trade. So you see it's opening low directly, right? As long as we respect like EQ of this previous candle's range, that's really all that matters, to be honest. So you're going to see that we're opening low first. Here's that swing low that we're talking about on the hourly time frame. This is just Asia lows, right? So it's Asia retracing, right? Kind of consolidating, taking out a little low there. And then London reverses, and then we have this hourly CSD, which is the T-Trade's ideal, not ideal, intracandle CSD is what he calls it. There's also a form of strike switching here as well, because YM here was the weakest asset. It retraced the deepest in the range. You see this? We'll mark out the previous candle's range. We're not even getting into discount. You see that? This asset's stronger. But you're seeing a form of strength switching, which is really good. Again, that does not mean that this asset will expand and hit these highs first. It just means that they will all trade in the same direction, so you have a really nice expansion. This is what ideally you want to see. You want to see all the assets trading in the same direction, just like I mentioned over here, which is what it did not do. You know what I'm saying? So what we have and what we can do is now we can mark out our invalidation points, right? So this is that hourly CSD. And then the fair value gaps that created after the initial expansion or reversal, the key levels away from this should support price higher, right? So these like fair value gaps, for example, I want to see these support price higher. So as you see, we hit this relevant level. And look at the current high of day at this time. It's 1800 again. Honestly, dude, if you were just to filter price where you would only trade the protraction phase of the daily candle before hitting the 1800, like you would just require the day to open low first and leave these Asia session highs, you would have a very high win rate. And you would just have always a relevant high to target, because if it just leaves the previous high and then opens low first, it's very high probable. You know what I'm saying? These are the days that typically expand. But anyways, we hit this key level prior to the driver. I don't think there's any news this day. No, there's no news. Oh, there is. What day is this? Oh, this is 10 a.m. news. I don't really care about 10 a.m. news. Here we hit this key level prior to driver, just like the other previous day, right? And then we have this 9 o'clock candle that prints this 30-minute CSD within the continuation. So it's just like this day. Within the continuation, the driver is going to open up near this 30-minute CSD. So we expect expansion into the previous high because we haven't hit anything relevant yet, right? This is just a retracement. Here's the expansion. The expansion hasn't hit anything relevant. So why am I choosing ES here? It's just because, again, I'm just trying the fractal model, guys, here. So here's your candle 2. You can already anticipate this CSD forming if we have a candle 3, you know? So if I go to 3 minute, 5 minutes, the same thing. So see these series of opposing candles on the 3 minute. What about on the 5 minute? Same thing. So I just require the 5 minute here. It's a bit cleaner. And yeah, I'm just trading the fractal model here. Within candle 2, we do not have a CSD, so candle 3 has to create it. So boom, you create it. So I'm entering right here, but I'm entering on ES because I didn't explain that, yeah. So look here. If I enter here, the RR is not very great. It's 1R, right? But I go over here. And again, it doesn't matter which one you really take. They're all trading the same direction, damn near. So this asset is clearly the second strongest asset. So typically you always want to either trade the strongest asset or like the middleman asset. Try to avoid the weakest asset because that's going to be the highest resistance in price, in expansion. So it means it's going to create the deepest pullbacks, etc. You're going to see boomy close above here. There's also a 2-stage SMT here, by going in Q, taking out this little low. This is also a form of continuation, expansion, seek and destroy. Seek and destroy is a continuous signature. See that? That's a continuous signature. We have this SMT here, which is, like I said, a two-stage SMT, because the low right here, if I show in the 3 minutes, some of you guys caught onto this. The low right here is 851. Go over here. The low is 845. So there's a two-stage SMT there. But yeah, so I took this here, and I want, like I said, I want my stop loss to be as close as that 30-minute swing point low as possible, which is the CSD. And I know I can expect price to expand past this high because we're in continuation. So what's the we're in higher time from continuation on our way to this draw liquidity up here. So within an expansion, what does price do? It respects order flow, so it respects fair value gaps and order blocks, makes shallow retracements, and it also displaces through highs. So if it's going to displace through highs but not get to here, I really don't think it's going to get all the way to here. So if it's not going to get here, but I can expect it to, trade a little bit past this high, because this is not a reversal point. We shouldn't be reversing at this high because it's just on our way to the drawn liquidity rate. We want to see this get displaced through. And you're going to know why I know it's going to displace through. I just don't know how far. Right? So this is where I mark out this projection, this little manipulation within the continuation. And I just take this. I know Tristo, he took this up here. So props to him. I guess I'm just a bitch, but this is why I took price to driver. And it gets a little bit choppy, but here's why. So NQ trades into this high direct, straight off the rip, right? And you see this little I think it's a, if I remember, yeah. So there's actually a SMT here, right? But this is how you know that I can hold this position. It's because the asset that manipulated here closes through. So what is this? A failure to manipulate, right? So that's why I know that we could expand past this high because we're not manipulating it on the strongest asset. So I know this asset is just lagging behind. And here's actually a two-stage SMT right here. And you see this retracement here. YM is actually, so you're going to see that YM actually took this high out. And ES, it took it out before ES. So what is this? You have an SMT here and an SMT down here. So this is just a fair value gap, by the way. This SMT. So it's a form of strength switching, right? So I know some people took this C2. Very good, honestly. This is the lagging asset here. Or this is how you trade a strength switching asset. You see how they're all trading the same direction, though? That's why you can take this, by the way. And it's within continuation. So we're already expecting price to expand on all the assets. So when you get this strength switch, it's absolutely fine. So price is definitely ugly here, but that's why I'm not worried about this at all because of these SMTs and the strongest asset failed to manipulate this high. So I can hold it, right? And this is when I just took it to here. It went much further. So that's a little bit unfortunate. You see it actually hit all these standard deviations. All right, but it's a little bit hard to anticipate that going all the way over there. So this is what I took personally. If you wanted to trade this here, this is very nice. So you either take this candle too and you take out the first CSD, because that is valid. That's how I trade candle twos. It's either around a driver or there's some sort of SMT. Or in this case, it's a strength switch SMT, so it's very good. But there's also this option here. So it's just the fractal model. Candle 2, you also have the reversal signature, expansion, method expansion. You have this inter-candle change state of delivery. If I go on this asset over here, I believe we actually created some sort of divergence. So this 1024 low got taken out on the strongest asset. 1024 over here. Where is it at? Right here. There's a divergence, and it's just switching strength to catch up to in Q, yeah. So this is where you could have taken. But it's there's not really much to target. That's the only thing, because we already taken this out. Oh yeah, this is why. Oh yeah, I forgot about this. This is why you kind of have to assume that what you see here is likely just a retracement, because we're just leaving these equal highs. You see, this previous high is just a fair swing to this high. So if I show you, so it makes sense why this is just a retracement, right? So you see this wick right here, this wick, It's just a retracement after taking out this high. But we don't expect this to be a reversal here because it's just a failure swing to this high, right? So there's a lot of logic to trade really that, and then obviously my ES trade as well. Really, these 2 days are really textbook, right? And then we're getting really close to this high, and this is where we just chop for the next 2 days, leading up to NFP. So how do we want this next day to form? This is why this is very important. The way these candles form is very important because this is a filter for price. If the candle opens high first, that typically doesn't support a bullish day, right? So you're gonna see this day opens high first and takes out the previous day's high, which is not ideal, right? As you see, and you see this wick right here. I actually did I take this wick or did I trade the next day? I think I traded the next day. I think I longed this. Okay, so you're gonna see that. Knowing this, I know that we're not going to reverse here because there is a 2-stage SMT here. But remember, almost every retracement or reversal in the market has a 2-stage SMT. But remember, you have to understand that's probably a retracement, right? Because we wouldn't reverse from here this high. It doesn't make any sense because look how close we are to the overall daily draw on liquidity, right? So what could this be? So whenever you see a high on your way to a draw on liquidity and we manipulate that high, this is typically just a trigger for like a retracement or something like that. And what you want to see is when we manipulate this high, look on the opposing side of that, and you're gonna have swing lows. You want to reject these swing lows. So this will be just be seek and destroy. Seek and destroy is a continuous signature. So you actually anticipate seek and destroy happening here when we actually hit the high first. But anyways, I know some people traded this, and we'll look at it real quick. Let me find it. So look at this high here. This is the 4 o'clock high. Go on these assets over here. We take out that 4 o'clock high, right? But what you're going to see is we kind of just consolidate, right? This is not a reversal signature. As you see, we just inside bar. That's not a reversal signature. So you guys have seen me talk about this. Where the frick? You guys have seen me talk about these type of SMTs. We do not trade these type of SMTs until we see something. So if an asset manipulates but does not reverse, so consolidates, which this is a consolidation, by the way. An inside bar is a consolidation. This is not reverse signature. So what if the SMT holds though, like this? We're not going to engage with this market until we get strength switch. So you're going to see that this SMT on YM is actually holding, but we're not going to trade it until YM shows some willingness to switch strength. So if you look over here on YM, you said we're just consolidating, not a reversal signature, right? But if I go over here, we're going to wait for a strength switch. So over here, wait, where was it? I think I'm getting confused. Hold on. Where was the strength switch? What the hell? Am I thinking of the right day? What the hell? Am I looking at another asset or something? I think I'm thinking of something else. So there's no two-stage SMT here. Could have swore there was, bro. That's awkward. Yeah, I don't think we have one, bro. Okay, never mind. I thought we did. Like, I could have swore we did. On some... Oh, here it is, bro. Oh, here it is, here it is, here it is. You guys don't use this time frame, though. So I knew it was on this, but you don't see it on the hourly and 30-minute. But here it is right here. There's your two-stage SMT, where we take out this high here. So I knew it wasn't tripping balls, but we won't talk about that too much because, yeah. Anyways, what else? Oh, yeah. So when we actually hit this low, you're going to see another form of two-stage SMT before the driver. So check this out here. Do we have news this day, by the way? Pretty sure, right? Yeah. So news goes and creates this manipulation, which is like an internal manipulation because these are the external ranges, right? Now, in order for me to actually trade, away from failure swings or within a consolidation range, it has to be with the right context. It has to be within higher time frame continuation, right? Because again, prices have to manipulate within a consolidation to really leave it necessarily. So with that in mind, you have to have also a two-stage SMT to leave that, right? You have to have like an internal manipulation for price to go from consolidation to expansion. This is something you guys saw me do on CL, but in this case, with the profile though, you see this profile, where's the open at? It's around here. It's like right here. The open is right here. Clearly not a expansion type of profile. So you have to adjust your targets. So where's my target? It's going to be this high. This doesn't call for an expansion day, past this high and whatnot. So you have to simply adjust your targets. But here's the two-stage SMT. So we hit this low at 820. We hit this low at 820. On YM, we hit that same low at 840. So what you're seeing that in Q was the weaker asset because it hit these lows first, and then it's creating a higher high. So again, a bit advanced, but this is what I saw. I forgot exactly where I entered, but really it's just a CSD somewhere in here prior to the driver. And you see the driver it just ripped higher basically, right into this high. So that was already my trade. Nothing too crazy. I don't even think there's any form of fractal model necessarily. On YM there is though. So YM prints a reversal candle. So you can kind of treat NQ, so this 9 o'clock candle, as the expansion candle. Because if this previous candle manipulated on YM, right, and within here you have a strength switch, then this next candle will expand into this high, right? So 9 o'clock, so the driver basically. So yeah, a bit confusing potentially, but if you miss this day, like, dude, who cares? Like, it's not a good day to trade, you know what I'm saying? I will show you this next day, though. So I'm still bullish, by the way, because of this. Like, this is not a reversal signature. So I'm still bullish into this high. So you're going to see this day in particular. It trades into this high. So boom right here. Let's pull up the drivers here. So this driver manipulated. So what should 930 do? It should expand right lower. Now if we go to ES, we also take out this high here, and then we're leaving all these lows behind. Remember these lows behind. But on YM, this made it extremely obvious. Look at all these lows on YM over here, and then we're actually having a form of strength switching because this asset over here took out the high on ES and NQ, right? But what did we not do on this asset? We did not close a body above these opposing candles. So that's showing that this asset is going to trade in this sort of direction, right? Which would lead YM to also expand lower. So here, this is a two-stage SMT right here. Right here. And again, since this asset is so close to these highs, you see how these assets are really close to size. I don't really like to trade this type of SMTs, so that's in my slides here. So you have to understand this is probably our tracement. So this is why TP is so early. Where the hell is it? Oh yeah, here it is. Failure swing SMT. So you're seeing that this asset over here is just kind of leaving behind all these equal highs. I typically don't like to trade that. It's just like the YM trade over here. It's like where is it at? Oh yeah, it's like over here. Like I would never be trading this SMT that we see here because there was an SMT. I wouldn't trade this lower because it's fair swing SMT. It's not likely to reverse. That SMT can be used as a pullback. So I'm viewing this as more of a pullback, to be honest, because these are relevant lows, by the way. So I don't know how far price is going to displace. For all I know, price could do this, but with the profile, it's not likely because this candle more so opens high while these other ones are just seek and destroy as well. It's not likely to do this, but you never know. Like we could reverse at this relevant low, right? Because I don't know how far the price can expand past it. So with that in mind, I have this already, this two-stage SMT. So I can drop lower. So what should the driver do? This is what really validates it. When the driver expands away from this high, so 830 manipulation, 930 expands away, this is what validates this as a true reversal. Since it's lower probability, I just take it on apex. So here's 930. Takes out all these little short-term highs here, and then closes the body below here. Now I didn't take it on the first CSD. I actually dropped the 1 minute and waited for like a little bit smaller confirmation, little CSD, and this is what I got here. So I took it to here, and I'm just TPing. I do this a lot. I TP when like other assets hit lows. If I'm gonna trade the strongest asset, because again, it could form that SMT in reverse. So you're gonna see that as soon as YM hit these lows, which is right here. Oh my god, I can't move it. This is when I TP, which is probably around this low, to be honest. So it's like 1.5 R on Apex, you know. That's typically what I trade, like 1 to 1.5 R, just because I don't bullshit with those rules. They're pretty annoying, but that's what I traded here, right? And you're going to see that this day here was quite the parade here. It was really not ideal, right? But coming into this day, it was very, very clear what the bias should have been, right? So if you're going to look here, so a little bit of logic here. If this is NFP, and if I go to the weekly candle this time, you're going to see it. It's already printed, but if I go to the weekly candle, the low of the week has 2-stage SMT. We've expanded away. Specifically on this asset, though, it's the same thing as this. Monday's low of the week. We expand away. We also expand away into a high, right? Which we then retrace. We expand to the high and then retrace. So if we're not going to, if you mark out your range prior to NFP, the external ranges, price is not likely to stay in this range on an NFP day. It's just not likely to do it. So if you're not going to come all the way down here and create that large wick on the weekly candle, then we would continue higher because we're already in EQ of this range. We're already here in the daily opposing candle. So where would we reverse from? Because look how this daily candle close is this previous low, ideally, right? And if you look at YM, it's like we're leaving all these highs, you know what I'm saying? Which I don't like to have. I don't like these SMTs typically. So this is this exactly on the daily time frame now. I typically don't like to see that. And what is the trigger for this asset to catch up? Is a strength switch. So I want this next day to be bullish to catch up to NQ and ES because they did take this high, right? So that's what I would ideally want to see. Is exactly what we see. Because if you look here, we do not take out the previous low, showing strength. Over here, we do. Right? It just gaps lower. There's no wick over here, but when you have no wick on a feed or a contract, or maybe you have equal highs, equal lows, always check the other contracts, because if you see it sweeps, I'm always gonna count that. Or if you see it create a wick, I'm always gonna disregard these assets that don't have a wick or something, or not assets, but feeds. But yeah, so we have that. We have a SMT that's created very early on in the day. So when you have that and price starts to expand away, you can actually trust that to be the low of the day, right? So within the continuation away from the low of the day, this is when we create a protected level within the continuation. So what does that mean? Is that we create swing lows within the continuation. So if we just mark out relevant swings on the hourly chart, because that's all I really care about is hourly and above relevant swings. 30-minute is fine too, I suppose, because that's the key levels that we use for continuation. But anyways, you see this hourly swing low, there's nothing beyond it. You know what I'm saying? So this is the ideal scenario to manipulate, to create a protected swing, to then expand away from again, right? So if I go to NQ or YM here, you see a form of strength switching because this asset CSDs, while NQ does not CSD. And then what are we doing? Creating a bullish, what do you call it? Divergence, right, to catch up to these assets. So what you're seeing is correlated markets. This is exactly what you want to see. You want to see these correlated markets so that price can expand. So you're seeing this asset's more sort of tracing, while this asset's consolidating, and this asset is really consolidating, right, but it doesn't even manipulates. So we're seeing this is very, very good to see. And this happens prior to the driver. So if manipulation happens prior to the driver, like this, what should the driver do? It should expand. If I was awake before this, I absolutely would have taken this. If I was not awake, I've been bullshitting. I've been staying up really late. I don't know if you guys were in the chat. I was in the chat till like 3 a.m. Just being stupid, man. But yeah, I would have absolutely taken this. Now, here's the other thing, though. If ES and YM are still within the previous low and previous high, and just in general, like, are we going to stay in between this higher time frame range on an NFP day? Probably not, right? Because we have the volatility to expand. And here's the catch though. On days like this where the drivers are opening up within continuation, this is when you can get very large expansions because it doesn't have to spend a lot of that energy or time to go and manipulate. It already manipulated. So in this case, we already manipulated prior to driver, so it just can expand. That's the same logic for these 2 days. The low days already put in on these 2 days. On this case, it would be like right here on NQ. We've already like manipulated or created a low of day, so it could just expand. We haven't yet hit anything. So in this case, we haven't yet hit anything either because the previous high is still available. We're not going to inside bar between the previous high and previous low on an NFP day. So this is when you can still look for continuations because that draw is still open. And this is a divergence, a two-stage S&P that I haven't taught you guys. I'm probably not going to go over it right now. It's just because I'm just not going to go over it. So here, there's no particular reason why I necessarily took NQ, honestly. It's just because I know it's the strongest asset overall, but I know that the strength has switched this day for YM to hit some highs because remember, YM has the most low resistance targets or draws on liquidity. So it's going to be the most expansive to those, where this is more of a high resistance target because we took out this high here. So I know that this is probably not the best asset to trade. It's actually the weakest intraday as well. But I only take it because it has the best opposing candle, or like the largest opposing candle really. Or if I got a YM, there's not much. I don't really feel comfortable entering on these little ass opposing. That's literally the only reason why I took this, by the way. But also there's a two-stage SMT inside of here. But I'm not going to cover that right now. So if we print that two-stage SMT, so what is this phase of price really? It's expansion, some sort of consolidation or tracement. And what's the trigger for expansion again? It's the SMT. So we already have that here. So my stop loss is on an SMT low. So I can expect the driver to do what? 930 to expand again, which is what we did. Right, and as soon as YM hits this high over here, this draw liquidity is when I exit my position. Because this is the perfect area to cap off the weekly range, is this daily high over here. This happens a lot. We're going to see highs of the week, days of the week, capped off by daily SMT or weekly SMT, or just these higher time frame SMTs in general. It doesn't mean we're going to reverse. Like it doesn't mean we're going to do this or anything like that within the same day, or even overall, like even the next day. It doesn't mean this S&P is going to hold. It's just going to cap off that daily range. You're going to see that it literally did it every single day on CL if you want to study that, which I did take CL on Friday, but that's what I took. And then we got a two-stage SMT. I saw some of you guys trade this. I don't think it's a good idea, to be honest, really. So we have this first stage SMT, and then we create it right here. There's your second stage SMT, which you have to understand, it's not going to be a reversal, bro. Not going to be a reversal because the daily low is way over here. It doesn't have enough time. This reversal got printed at 11 a.m. It's not going to have that enough time to go all the way down here. So if you did take this, just know this is your best target, right? Just back within the daily range, and this fair value gap is like the perfect area, right? So if you took that, like cool, but it's pretty low probability, even though it has this two-stage SMT. So like, yeah, there's two-stage SMT at almost every single retracement or reversal. I see a lot of people take these. But you have to understand it's still low probability. It's still counter trend. You know what I'm saying? It's just counter trend to the daily range. But yeah, that's what my week looked like on indices. And shit, I used all the whole time to talk about indices, but I don't have enough time to go over the other assets really. Let's go over here. So, thoughts on Trump Elon beef? I don't give a shit, honestly. Doesn't affect me at all. Garrett's Roof SMT. Yeah, you talk about Wednesday seek and destroy trade. Can you talk about Wednesday? I did, right? Yeah, I did. These 2 days are low probability. Even this day is here, guys. These two trades that I took, very advanced, very low probability. But even in low probability conditions, you see how I'm adjusting my targets, right? This literally, I took one hourly candle right here, by the way. From here to here. That's it. Because the profile doesn't call for some anything after that. It doesn't call for anything after that. And then this day, it's like I'm not going to short this day either because we haven't taken this high out either, right? And then this day over here is a very small move. Again. So it's not something you have to trade at all. It's literally one candle again. It's a 9 a.m. candle to all these lows that you're seeing. That's it, right? Is that the different course? It's not a course. It's just I do lessons. So the way I do my streams is I typically do the lessons where I don't know if anyone else does them. I don't really know, but I create slides so I can present them in an easy manner, and then I go into or spend the rest of the stream going over the examples that are covered in the slides and whatnot. So if you want to look at these SMT slides and stuff like this, I have a stream on it, or I have a YouTube video on it. It's just a deeper dive into SMT, not something I've covered totally, because it gets really deep and confusing, and I feel like it can be very damaging in a sense. But like, if you go on, like it's everywhere, dude. Like it's at every reversal. I'm not even joking. If we go on this day here, I gotta find it. I think it's this day or some shit. Oh yeah, right. It's right here, right? So look how this asset took out this high. And then we're having an SMT here, right? But what's the trigger for this asset to catch up? It's a form of strength switching, right? So here you see at the previous low. Right, so you could trade this candle 2 higher, or this SMT here, but that's how you know it literally validates this SMT breaking. So this gives you a draw on liquidity for the next day as well. It's so good, especially on the higher time frame. Like, I don't have to do any higher time frame anticipation. I don't have to anticipate anything, guys. Like, it's not some magic. I just have a deep understanding of SMT, and I just wait for an SMT. You know what I'm saying? In the direction of my draw on liquidity or whatnot, and then I just wait for a additional Kraken correlation to confirm the SMT, right? And it's pretty simple. I promise you, it's really hard to learn, I would assume, because there's a lot of moving parts in my system. But once you learn, bro, you will not be confused. Like all these like holes in your learning or whatever, like you will understand why price is moving. It's actually crazy. And I've also told you guys this, bro. When an SMT breaks, the trigger for, like, for example, like we didn't manipulate this high, for example, right? When that SMT breaks, and you have a reversal signature on the asset that basically broke the SMT essentially, this is when price will expand away, right? I'll show you plenty of examples of this. It happens all the time. This is something I have not taught you guys either, particular, but I'll show you an example on gold this week. This is a really good thing to see on the higher time frame as well. So go here. We created an SMT here, but remember, if we do not reverse on the asset that sweeps, what does that mean? That this SMT that you're seeing right here is going to break. Right? So when it breaks, and the asset that breaks the SMT, if it manipulates this high, that's the trigger for this asset to also reverse. Right? And then why was I bearish this next day? Because first off, this is the perfect area to cap off the weekly range. Even on the strongest asset, dude, this weekly range is finished basically. Like, look at the weekly range. It's huge, and it took out this high over here, right? Or this high actually. So it's like this is the perfect area to cap off the weekly range on this asset, being silver, the strongest one. So I know it's not going to expand again. Doesn't make any sense. So if it consolidates or retraces, you see how they're very desynced, as you see. This can allow these assets to expand, right? So I can measure strength. I know that this is the strongest asset, this is the middleman asset, and this is the weakest asset, right? You see this SMT down here? I want this to break. How do I know it's going to break? This SMT they're seeing is when this following day switches to the weaker asset, right? So this is what you're going to see. You also have a reversal signature even on the middle asset here. So let's just go over phase of price, because this is a core concept, right? Expansion, melt expansion, that's reversal signature, followed by retracement. What's a retracement signature? Is when we hit a relevant low. In this case, it's the SMT, But you see how this is not a reversal signature. This retracement is not a reversal signature. So what does that tell you? That this SMT will break, and this is a free drawn liquidity. So I tell you, like, when assets fail to manipulate SMTs, it's like a free drawn liquidity when you see a strength switch for this asset to catch up. So that's what you're seeing here. Is if I just play price a little bit, you're seeing this asset is creating opposing candles. Y'all see this? And then if the high of day is put in, what should the driver do? This is 830. Let's go up to 830 actually. 830 is right here. It should expand away. So when it does that, it's expanding away. This validates that the high of day is put in and we're actually bearish. I'm telling you, one of the most consistent things you'll see is SMT and drivers. But yeah, this is what we see. You're seeing that we're creating, higher lows. But on here, over here, we're just consolidating. So this asset's consolidating, while the other one is expanding. So this asset is stronger than gold, right? But consolidation is not a reversal signature either. So even on the stronger asset, this is still a continuation signature, right? So that's why you can trade this as well. And this day in particular opens high first. So the daily candle is also showing a bearish profile. So I'm always going to favor, if the daily opens high first and I'm already bearish, I'm going to favor bearish SMTs, right? Because the daily is supporting that. You know what I'm saying? But that was an example of a price reversing when SMT breaks. I'll show you some more. I traded this one down here. You see how this asset had an SMT here at one point, but we didn't manipulate it. So this SMT that you're seeing on silver will break, likely. So when this asset that breaks the SMT, when it hits it, this is a potential reversal point, right? So, but the trigger for gold to have a reaction, I guess, away from this low here, is when silver hits it, and ideally you see a strength switch. So if I go here, we know that this asset was the weakest, obviously, but you're seeing that intraday, we're the stronger asset, creating a higher high. So that's so that all markets can expand in the same direction. You see that? This gets created as soon as we trade into this low. As soon as we trade into this low. I'll show you some more examples. Happens all the time. It even happens intraday. I'll show you an intraday example actually that I took on YM a couple of weeks ago or something. Yeah, here it is. You can't make this shit up. It's actually crazy. Like, so look here. At one point, this was an SMT, right? Boom, SMT. But these assets did not manipulate this high. Clearly, right? No manipulation signature. No manipulation signature. So we know that SMT is likely to break. So when it breaks on YM, this is the trigger for the other assets to expand. And this is a form of strength switching because this was the weaker asset. You see how this candle is bullish? These ones are bearish. That's showing, obviously, this is weaker now, where this is slightly stronger momentarily. And that's the trigger for this model to play out, right? So 9:30 manipulation. And then we can expect 10 o'clock to expand. So this is just GXT, right? So 6 o'clock manipulation, 10 o'clock expansion into this low. Does that make sense? And again, you always trade the weaker asset, even though it's momentarily switching to stronger asset here. But again, that's just a trigger for the stronger assets to trade in the same direction as the weaker one, so this one expand. So you always want to trade ideally the stronger assets. But it's a bit different when they're really decoupled though. So again, I don't have enough time to explain it, and I have to explain a bunch of things, and maybe that's the time for another SMT whatever stream. So can you review gold? Yeah, I can review gold a little bit. So look at Monday here. So check this out here. We created an SMT on Friday. So the previous day reversed, as we see. has a reversal, then what can the next day do? Expand, right? And if you look at these signatures in general, it's like I would lean bullish regardless, because look over here, it's like we're trading into these highs over here, and we're just consolidating, as you see. And this is creating an SMT actually, right here. But we don't give a shit about this SMT, honestly, because it's just consolidating, right? So what does that tell you? The SMT is going to break. So I would already be bullish, already. This is what we get here. If Friday manipulates and creates that SMT, then we can expect Monday to expand. It's just like in Q. We manipulated Friday, so in Q expanded on Monday. Same shit, right? But this expansion is huge. It's very exaggerated, so this is not ideal. I don't really want to see a Monday expansion that's this significant. It takes out all objectives, really. And we didn't manipulate this high, as you see. You see how the strongest asset did not manipulate this high? So what does that tell you? That if we're going to get a new phase of price, it's likely to already be a continuation signature, like a retracement or a consolidation, which is something that we do not want to trade. Those are things we want to trade reversal, right? Or we want to trade continuation, but I don't want to trade a retracement day. I don't want to trade a consolidation day. Like, this is not something I want to trade. So you're going to see that we get a form of strength switching, which is just the trigger for it's not a reversal, it's likely a retracement, like I said, because of this there to manipulate. So you see that it's just clear the stronger asset over here. In this asset's kind of like the middleman. So you get that strength switch, which is the trigger again, probably for a retracement. But over here, it's like this happened like so early in the day. Like this expansion happened very early on in the day. So it's like there's nothing to target anymore. It's like you have only fair value gaps, which we already have taken. And I wouldn't really take any of this stuff in here. You see it's very, very choppy. There's a reason for that. Because this asset over here is not showing any willingness to trade lower, right? It's just expanding and just consolidating. So what you have is like this asset is not going lower. So this asset will not have a very clean expansion lower. But we can't go higher, right? Because this asset's not going higher, right? It's not reversing from any of these SMTs. You see all these SMTs, this got created a long time ago. They're not reversing at all. Like you see all these lows that you're seeing here. Even this one, even like these lows. Because the low of the day over here is 2300. 2300 is right here. Let me just like go over here. 2300 is literally right here. So any of these SMTs that you're seeing, absolutely relevant. They're absolutely relevant. I would never long this day because assets are just fighting each other. You know what I'm saying? There's no synchronization here. So this is when it's literally a consolidation signature. You know what I'm saying? So I would not trade this. And with that in mind, you see the next day as well. We don't take out the external ranges of that consolidation. So we just inside bar. So again, this is a continuation signature though. And like I mentioned, price doesn't have to manipulate a consolidation low to expand again. Right? As you see, price expands again over here without manipulating any of these lows. We manipulate the consolidation high here, and then we reverse, right? So this gives me one-sided narrative for Friday though. So that's why I shorted Friday. I didn't really trade anything within here. I know some people shorted this day, which I don't think is horrible. To be honest, I don't think this is a horrible short. I just didn't take it because at the time I got to the charts, price was like right here, damn near. So I was not interested in it because if you look at this time, like this asset's really low in the range and this asset's really high in the range. So as you see, this asset's consolidating while the other ones are expanding. But I just wasn't the biggest fan of this day in particular because the profile, it also opens low first. So here's the daily open. So it opens low first. Not really a fan of that. I think the long is actually really nice though. If you guys traded this long, this is the A plus long right here. Because the daily opens low first into this gap, right? And you have a 2-stage SMT here to get to here. I think that's a really good trade. It's in Asia though, so I don't trade Asia really. So, but yeah, I didn't take that day, and you can't really take this day because again, it's just freaking rips in Asia and London. So nothing to take there, nothing to take here because the same thing happens. So it's like, and I also don't want to trade this day either because it's just inside barring. You know, so there's not much here on gold to look at, but on CL and stuff there really is. I traded a lot this week on CL. I think I traded 3 times. Took 2 wins, 1 break even. Yeah, I did not trade Monday, we're going to see it's the same thing. So check this out. We had this SMT here. Clearly do not manipulate on these assets. Clearly not, right? So what does that mean? That this SMT that you see here is going to break. But when it breaks, and you see a manipulation on this asset, this could be the trigger for these assets to reverse, right? So we had that Friday. So Friday does that. What can Monday do? We can expand, right? So we actually saw this on all the assets. All Mondays expanded because of this. We had some sort of manipulation on Friday. But this happens very early on in the day, like very, very early on in the day. I thought this was a pretty clean opportunity if you trade London session. It's like not horrible. So typically I would not want to trade a London expansion if Asia expands, but here we manipulate here and form an SMT here, which is a form of strength switching because if you look at CL already took out this high. You see this high right here? Friday 30th of May, 7 o'clock. If I go over here, we have not taken it out. So you see how we're switching stronger to catch up to this high? Same thing over here. We're switching stronger. So that's just a little, this is a good trade in my opinion. It's to get to this high though, if you're going to check that. But once we hit this relevant high over here, it's likely not going to go all the way over here. That would be an insane daily range where these other assets are not hitting these highs. So this is what I mean by a lot of times that these can cap off the daily ranges basically. Like SMTs can cap off the daily range. Doesn't mean it's going to reverse because we didn't reverse from here because this is a fair swing this high. I wouldn't even expect a reversal. But you could technically trade this because this is when we get a strength switch here. What time frame was it on though? 30 minute? Yeah, 30 minute. So clearly this asset's weaker than CL, right? But you can already see it with the closes of these candles. Bearish candles, bullish candle. That's the trigger for these assets to expand lower. This would just be your retracement though, because like I said, the daily range is very large to the upside, so it doesn't really support some expansion all the way down here, and we wouldn't be viewing this as a reversal because this is a fair swing to this high. So the daily model is this manipulation, range low to this high. So anything opposing to that, like these highs, I want to see being displaced through. So if we put in some SMT at these like random highs, like you see right here, on your way to withdraw liquidity, they're typically just retracements to the higher time from draw. So I could really cover maybe a video on this on CL because it's very, very logical on how this like reverses and stuff. You even see right here, like it leaves these fair swings after a true reversal. Right, this is just like a lower time frame reversal. It's just a higher time frame retracement though. We create a gap. So when you create a gap, you want to see these two hold, right? So here you're seeing a two-stage SMT. Let me find it. Yeah, so check this out here. So the high right here is 12 o'clock. We're over here. 12 o'clock obviously creates a lower low, right? Or it's like right here or something. But then we're creating a higher high here. So we're taking out that 12 o'clock high. So you see that? That's a two-stage SMT, like I mentioned, with swing points. I'm not even referring to this time frame though, but you can still see on this time frame. And you could trade this little move, right? This little move to here. But this is a relevant low within the daily range. So we know it's not going to go to the previous low. So this is the perfect area to cap off that retracement, just like you saw me do on this day I was talking about on indices, right? If I go on indices, if we're not going to go to the current day's low, whoops, let's look on YM. Like this day, for example. If we're not going to go to Monday's low, right? If I'm viewing this as a retracement back within the weekly range or the daily range, then we're going to look for relevant levels within that range. So this is what caps off this retracement. Same thing, but fractal. But anyways, we're over in the hour here. Probably leave y'all with this. And yeah, you guys have a great weekend.